It's on.
Yeah.
Ready. The Democrat.
What's going on, guys? This is Random Rabbit podcast number 2020.
Yeah, I just want to start off by saying that at this, the Wall Street Journal reports that Democrats on the Budget Committee agreed to a $3.5 trillion education and anti-poverty plan, said Majority Leader Chuck Schumer.
Did that just happen right now?
Might be updated at this moment, so that means they just put it up.
You
a lot
know
of
what?
money. I don't think Republicans do that.
$20 trillion is going to what?
$3.5 trillion plan, climate, education, and anti-poverty.
Interesting.
0.5.
Actually, White, you might be the one lagging this time.
Am I lagging? Everything's fine on from my end.
Let's try.
I'm only to edit in.
I might try redoing our video then.
Is it laggy on this?
We'll be right back.
Be right back.
And this will be the first topic we talk about today. Okay. We're back. Say something, White.
Hello.
I stop talking now.
Oh, shoot.
Motherfucker. Fucking guy.
We're back. Welcome, Random Rabbit Wyatt, Random Rabbit Jeremy. Always a pleasure.
What's up?
At least for one of us. I always find pleasure in these conversations. Wyatt, on the other hand, is quite vindictive.
I absolutely love everything. I hate you. This is definitely absolute. When we become wealthy and famous, I'm suing this shit. You made a podcast back in the day. Yeah, Josh said some shit to me. I don't like it. Yeah, defamed me.
Oh, good times, good times. Well, let's just jump right into the news. Random Rabbit number 20.
All right. Whoa. So I'm going first, right?
Yep.
Okay. So first up, China increases their exports by 32%. Rises a survey of economists done by the Wall Street Journal. And there's a stronger expected growth in June. We spoke about some COVID outbreaks affecting some of the big shipping ports in China. Expectations were about 25%. 23 to 25% for June, and they hit about 32%, which was pretty high. And it seems that they're kind of shaking off these outbreaks, and they're keeping the ports running. And the imports and exports in China experienced their 13th overall year-over-year growth. So it's 13 months of each of those months having a greater amount of importing and exporting as did the same month in the year prior. 13 months. And they're still seeing a large demand for Chinese products as well, and they just upped their trade surplus $5 billion to $51 billion US dollars. But at the same time, they do say that they expect the second half to slow down. And that's just as they look at the aggregate of the global economy and see shifts in the supply chain. So they were up for a while, definitely put some surprising numbers, but they do expect as a whole for it to slow down just generally in the second half of the year.
Okay.
China making some moves after everything's been slow. They're finally getting back into the game.
Gets me hungry for some Panda Express.
So the Panda Express ads.
I had to swallow that coffee. I was
cool.
just like, don't you spit at that computer.
So
wasn't made in China. It would have taken it.
Panda Express adds Beyond Meat to its menu in select stores. So why is this significant? Well, Panda Express already had other plant-based options, but they hadn't had Beyond Meat yet, so they're mixing it with their orange chicken sauce, and it's going to be around for a limited time in New York City and Southern California, where I live. Get it. and look on July 26th. It'll be for a limited time while supplies last. And this is the first Asian concept restaurant to serve Beyond Meat, but I'm talking it's really because it's a macro theme, right? And I'm sure many people have already noticed this, but not only is there, plant-based alternatives for you to buy and shop for groceries on your own, but we're seeing a lot of plant-based alternatives being issued in restaurants. So you're seeing more and more restaurants include these plant-based, vegan, et cetera, options. So definitely a macro trend, I would say, in food service and grocery. It's kind of spreading everywhere. So you can kind of expect, if you're betting on that, on based foods, or you have an investment strategy around, maybe plant-based foods, renewable energy, like, cleaner portfolio kind of methodology, that would probably be good news for you. And in the last few weeks, Beyond Meat also rolled out meat-free chicken tenders in nearly about 400 U.S. restaurants. So definitely also good for Beyond Meat. So it's definitely making some big waves for itself, as well as this macro trend of plant-based foods that we're going to see not only in grocery stores, but probably start seeing in a lot of restaurants, maybe even including some of our fast food restaurants. I know they also did some chicken substitutes in KFC as well. They've been testing. So even in the our traditional fast food ones where you're thinking like chicken burgers, greasy food, like starts alternatives. So, having a serious impact, and people are changing for demand in the market.
Yeah, I mean, in 2019 of July, they're at a high of 234, and they've been dipping all the way down to $82 and went further down in the consecutive months to $57.99. And it finally hit another high of 194. And right now it's, Beyond Meat just kind of needs all this good publicity. So them pairing up with Panda Express is actually a good thing, because their stock, even though it went down today, it's at 140, so way higher than the 57.99 low that they had in March of 2020. But we all know what that was from. But it hiked up, but not to nearly what it was back in the day of 234.90. But it's still good.
Definitely good company. Definitely some opportunity for growth here. I haven't looked at their financially, so I don't know if it's very expensive relative to how much money it makes right now. As a theme, plant-based products are hitting the market. So especially if there's newer players.
Did you guys ever try that Whopper that had Beyond Meat in it?
I eat mostly vegan now, so I don't
Whoppers. Yes,
meat. I've had it because I take Beyond Meat. I eat that all the time as burgers, and they do have like chopped meat. You'd be surprised the number of. I'm not a vegan by choice. There's.
Get your excuses out of here.
He's not a vegan by choice. He's told what to eat.
It's a dietary restriction for an illness that I can't really eat as much meat. I want my joints to. So, but you'd be surprised how many options there are for plant-based products, hot dogs, beef, and it's not terrible. I have to say, it's not the same. So I'll always miss steak, but it's pretty good. But the point of this whole thing, it's everywhere.
Okay, Wyatt. We'll sneak you some steak. We'll sneak steak for you.
No, you don't understand.
Don't worry about it. I got you. It's okay.
Great,
your girlfriend's
you carry me out when my knees are all
you.
swollen. I look. I'm happy about it. When I eat meat, my joints swell up. It hurts. Man. It's no good. It's about living pain free. You know what I mean?
I just hear excuses.
Gotta make a decision.
Panda Express, Beyond Meat. It's a good sign. Hopefully that stock just keeps going up.
I hope you get run through by a bull. I hope a bull just spears you, just carries you off over the horizon, and they eat you.
Well, I'm hoping that the bull market slows down, because we are way overinflated on the stock market. So,
yeah, shit's expensive. Shit is very expensive. Everything's expensive. Shit's not supposed to be expensive. I was even reading a story about rubbers, and it might be getting expensive. We might be covering this story later in the week. Apparently, rubber is becoming very expensive out of China, and the U.S. is 90% dependent on China for all this rubber needs. So, let's see what that is. Okay, so but moving on though, we do have a story, and that is that U.S. companies with ties to China's Xinjiang province could face legal consequences. And this is from Joe Biden. the Xinjiang was it there's like a public area there that's where the Uyghur Muslims are, and China is currently being allegedly committing genocide, and keeping them in camps, and just doing a whole bunch of human rights violations. Joe Biden came out and said, with growing evidence of this genocide and other human rights violations against the Uyghur Muslims, any companies doing business there are going to face legal consequences. And this includes doing direct business with the government or surrounding area, or indirect business with it. So it's kind of a mandate that comes down and says, we're completely boycotting this part of the country. You're not doing any business. We're not allowing it, period, in this province. And if you go ahead with, you could run a high risk of violating U.S. law. So that came out today, as well as the U.S. added 14 new Chinese companies to their blacklist. The blacklist is basically company cannot receive U.S. investment whatsoever. So, they're not going to get any investors. They're not going to get any money. They're not going to have any U.S. citizens legally investing in it, right? Obviously, we do illegally, but then you have to hope the government doesn't catch you. And the U.S. government takes you finally to those things. So, so that's what's going on today. Joe Biden update. He had originally limited service that area. Now is kind of coming all out and saying, like, if you do any business directly or indirectly, have, part of your business there, clients there, do some sort of business there whatsoever, you could face legal consequences. Definitely going to probably see fines, big action as well. So definitely was an interesting update today. Something you should know about if any companies on those areas. All right.
Well, at least they're stepping up and doing something about it. So.
Right. Exactly. I mean, short of going over there and liberating them, which would start World War III.
Yeah,
this
exactly.
This is probably as good as we're going to get without plunging ourselves in a conflict.
Mm-hmm.
Yes. So probably, yeah.
It's still a fine line that they're treading. So, I mean, no one wants to be told what to do. And, at least there's something coming out of it.
Right. I mean, it's mostly just posturing, and it's kind of like what you would expect is if, your country's president is against genocide, the least they could do is be like, hey, let's not give them more money.
Yeah,
let's not do
exactly.
business there. You know what I mean? And let's not support their regime.
And that's just what has been, put on the newspaper, or just information that has gone across. That's not even probably that's only 5% of what actually is happening over there. So they keep everything tight-lipped, shut. For us to get for us to get bad publicity out of China, it's some people are risking a lot.
Right, some people risk their lives to go ahead and just to I saw the government and I don't like it. Tell you about it. Risk your life, your family's life.
Exactly.
The great image of the party, of the country, but how great is it if the citizens being persecuted and they aren't allowed to criticize the regime, right? I mean,
they're telling human beings how to live, and they're restricting other human beings. So that's what happens when you're the top of the food chain. There has to be an even higher top within that species, and that's what's being shown in China.
Right. There is a clear dislike to the Uyghur Muslims, and depending on what you believe, there are significant degrees of human rights activities or anti-human rights activities occurring in the country.
Exactly.
So, updates from Joe Biden. I don't know if any U.S. companies are still doing business there, but I imagine still they're not going to be doing it. So they don't face any trouble in the U.S. Okay. So the last two stories here are going to be about Google. So the first one is that Google helping insurance companies manage fall risk. So they're collaborating with a company called Blue Zoo from Menlo Park, I believe, over in Silicon Valley. Even though no financial terms were disclosed, the purpose of this is to help size up risk for property and casualty insurers. So what they're going to do is they're going to release lots of, as they described it, small sensors in buildings listen for Wi-Fi modes spontaneously emitted by mobile phones. Sensors encrypted these blah, 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 forward them to the server where the server analyzes their proximity to each other and how they're moving around and try to figure out where paper could slip, people could fall, get hurt, how many people are in the room, how many people should be in the room. And it says that stays with about 90% accuracy. Normal measures are generally inaccurate relative to obviously cold hard data and sensors to measure everything in the room. And the concept here is giving people assessing risk and occupancy levels more effectively. When we look at this in the industry, we already know that AI is already used in the industry. So, for instance, fire risks on properties that are being sold, people with aerial photographies and use AI to try to determine what the risk could be, where there could be brush, forestry, what the risk to your property. And there are currently people in the current car insurance industry that are looking at AIs to people take pictures with their phones and send pictures, have the AI be able to determine based on the damage what the estimate should be, almost instantaneously. So we're definitely seeing a lot more data and tech come into the insurance field here. And Google's going to be stepping up and helping out with that. And Google Cloud, it's Google Cloud specifically, the cloud part of the company. And Blue Zoo, so working on optical sensors to measure things like lighting usage, foot traffic, and areas of congestion. So literally watch, people around and calculate where the bottlenecks are and things like. First, the company says no personally identifiable information is to the cloud. And they do that to meet compliance in other major markets that have other major markets around the world that are less lenient with technology laws than the U.S. So I don't know if you believe that, it's up to you, but that's what they're doing. I'm sure that some information is being transferred, but I don't think any of it is necessarily malicious. So I think it is interesting, and it's definitely a sign that insurance is becoming more of it was already a mathematical equation beforehand, trying to figure out what the risk of having to pay out was, and now you're going to have them, preemptively measuring and analyzing the proper amount of insurance and the proper amount of places. So definitely very interesting technology coming into the insurance field.
It's about time. There's so much that can be done. So,
yeah.
I mean, hopefully this just brings greater transparency and less of a fight when it comes to working with your insurance and just the overall third parties, whoever's involved in accidents or whatever. They're a pain in the butt.
Right. Yeah, insurance companies really don't want to pay. I don't know if it's going to make it easier or harder to get payouts because in my experience, insurance companies, they exist solely to not pay for anything, and if they do pay for something, then you're gonna have to pay them more money in the future, and therefore your mathematical model will have a higher likelihood of be having to pay out. So I don't know. We'll see. Let's see what it does.
Yep. Okay. And then
all right,
Google Find.
All right, so it's Find, and this is the latest in has been, it will continue to probably be tech downs. So Google was fined $600 million by France over the lack of deals for showing news content. So as part of one of the European Union copyright directives, online digital platforms must for monetary deal with publishers for news content, because as well, a lot of these digital platforms using news articles that these produce a way to bring in viewership, then they should rightfully get a revenue by that, because you're using what they do, you're using their work and their content to bring people on. And the argument was that Google really in a timely manner. Even though Google had reached out to make some, hadn't made it with all, and then France came down and said, when we expect you to basically, when we tell you what to do, we make this a rule, we expect you to follow it to the completion, not just to. Google is obviously disappointed in this, that they didn't act. That Google had been acting in good faith, and France was not, while they were ignoring their efforts to make the deals. But Google wants to turn the page into a position so they're paying the fine, and they've made deals with several of the publishers. I think they'll have a few more left to go. And the French said, okay, that the French was the Francis Authority specifically said that these fines can come up to in the future now $356,000 a day for every day that Google's using that material from a publisher past 2 months past when the publisher has to make a deal. So if they start using the deal is for 2 months, if no deal is made and Google's still using it, it's the $356,000 a day per day until it's met. So they're very serious about this. And Google says most of this refers to pre-September 2020, because since then they have made many successful deals with many of the publishers. So just the latest news in the big tech crackdown, but it looks like all that's being cleared up and everything should be good to go. And Google's been actually very good at meeting the requirements of other countries and working with them to find solutions. So I applaud Google for that. That's actually good of them. Of course, they also have a ridiculous amount of capital, so they can afford to pay $600 million billions like style. But say la vie. Tech companies are giant piles of guarded by AI.
And that's how it works right now for Google. Thank you very much, Wyatt. This was very informative.
You were very welcome, Josh.
I will not be eating Beyond Miracle Meat, and I'd rather, take my luck with the real stuff.
I wish.
Talking about real stuff, let's jump right into crypto. You see what I did there?
That was like similar to the joke you made this time, and I know that because I was cutting up the video, and so real original, Josh. Yeah, good one.
All right, guys. So this is cryptocurrency section time moment for you who like crypto, and we're looking at the police seizing close to $250 million. It was like 118 in euros or something like that, but $250 million in cryptocurrency in the UK. What they're saying is that they're trying to send a message to anybody who's trying to use this money illicitly. I believe that's the correct term, illicitly. That to be worried that they're tracking it, that you're going to be caught, and to use it fairly and squarely. And so this definitely shows maybe like some green light towards where we're looking at some law enforcement getting their hands on technology to combat, track transactions and our coins and move forward. So I see this as a win. This is going to put a little bit more trust into people who don't want their Bitcoin used for evil crimes. I don't know what's a better way of saying that, but
evil crimes used for evil.
It's for the bad guys don't get it. And so with that, we just jump into what's going on with the market. And so if you jumped on and you saw your Bitcoin today, you noticed that we are looking a little lower than we have the last maybe week, but we're still staying above 30,000. What we've been noticing though is that during this dip, there has been this, I guess, competition between Ethereum and Bitcoin, saying, okay, is this the time that Ethereum's going to flip Bitcoin? There's a lot of green lights showing towards technology of Ethereum, but Bitcoin is still, the Mac Daddy of it all, and having Square jump in, how we talked about yesterday, creating the hard wallets for the future Bitcoin transactions. These are all big news that's still keeping momentum up. But what I wanted to show you guys was right here, the Bitcoin Ethereum volatilities. And we're seeing it's pretty much matching. We have Ethereum that's been way more volatile than Bitcoin has through the last year and a half. And so we are going to just hope and pray that this is the continuation. But from the charts, it kind of looks as if we're following a pattern of a downward trend. We don't know that, and it's going to be interesting because there's a lot of people right now who see Bitcoin hitting that 30,000 mark, and they are jumping in head first without looking back, without questioning their purchase. And this is probably why Wyatt himself is going to be purchasing Bitcoin and probably making it one of those family currencies, something that he'll pass down to his kids and his kids' kids. Talking about kids, I wanted to bring up something that's hype right now, which is called Binamon. And so these are blockchain monsters. What they're trying to do, it looks like they're trying to create like their own Pokemon cards, monsters, and we're just gonna go over to their website. This is a cool little project. You're able to create any number of cards, create any number of it's a lot of partnerships. And here we could see that you can create live action cards that are connected to QR codes. These will then be most likely used inside their game, and you can then start the newest collection of Binamon. This could be, the next big thing. This could be, we could be looking at coins. Let's see, this is priced 25,000 BNB. That is ridiculous. How much is BNB right now? What are these costs? BNB price. That is not the price of BNB right now, is it? 300. So, okay, let's just get a quick calculator right here. Calculator. Now we have 25,000 times 300. You're telling me this thing cost $7,500,000. Am I looking at this correctly? 25,000. Yeah, this thing right here is worth for some reason $7,500,000. I can't.
Wait.
Is that real?
That's the Binance coin you're looking at.
Yeah.
It's $298.
298, yeah, times $25,000 makes this card $7,500,000. I will do more research. This is absolutely ridiculous. But if anybody,
what is it?
This is Binamon.org.
And it's priced in Binance coin?
BNB, correct. This is wild. So, guys, this is right here. You're hearing it first from me. One of the latest hypes to come out. We'll see where this comes from, how it continues. Looks like they have Binance Chainlink. What are some other ones? Yahoo Finance, interesting. And so...
yeah, it's up there. It's $299.
That is just absolutely crazy. Crazy. But guys, this is your crypto update for the day. Words and concerns?
No, I was thinking a thought, and then I stopped thinking of a thought.
And then you stop thinking altogether. Makes sense.
Right. Yeah, that's what I do all day. I just think that.
It hurts to think.
I'm basically 2 steps above vegetable. You know what I mean?
Shots fired.
I'm dressing up as broccoli this year.
As long as you get that one other brain cell and that other one, and they try to make something happen, you're doing something right.
They generally have a couple of meetings throughout the day to try to figure out the agenda, but they never really quite see eye to eye. So usually my eyeballs go in different directions, and I just drool. But right now, they're hanging out.
That makes sense.
So I can talk to you.
That makes sense.
They drool.
100%. I drool as a result of my 2 brain cells not being able to function, so I barely have any motor skills.
That's tough.
Otherwise, the ability to think. Right now, though, get lucky. We've been inviting a friend over. Third brain cell. Can you imagine that? 3 whole fucking brain cells.
Don't overdo yourself there.
I know. I might need to rest for a whole day after that one. It's gonna be a lot.
That's good.
Hi.
I just store pens up here now. Just empty. Put shit up there.
All right. Should I go into it?
Let's
do it.
All good to go.
All right. Let's touch upon Alaska first and how they lucked out in this whole GME fiasco. They scored 900% gains on GameStop this year and boosted its bet on the meme stock last quarter. So Alaska's revenue department made a tenfold gain on GameStop in the first half of this year. The state agency increased both its GameStop and Tesla bets last quarter. So in December, they're at 43,000 shares of GameStop, which was worth at around $802,000. They whittled that down. What did they buy at? So they were in it before the takeoff. So they're in it way before it was $5. So they were in it for a long time. Perfect. 43,000 shares of GameStop, which was $802,000 worth only. And at the end of December, and then they started trimming their position down all the way to 37,000 shares over the next 6 months, and then GameStop ended up skyrocketing, and they closed some positions worth $8.2 million. And guess what? they are now going back into the trade. So they still have 37,000 shares. They just bought in 1,400 more shares on top of that. So Alaska's sitting pretty. They're hanging out.
Except for all that whole, the roughest state in the world to live in.
They're gonna take
Yeah,
nowhere,
I mean, see, the thing about Alaska is they will pay you to be there. They will pay you to live there.
10,000. They're supposed to give you about, I think, what, $10,000 property.
Oh yeah,
That's
they
also
give you
because
a nice
it's
stipend, and it's very difficult to
frozen hell to live.
in.
Like,
and
no doubt, props to all the Americans in Alaska living their lives, but I'm not envious of that.
Yeah, no, I mean,
want it.
the
You
people
want
that I've heard that live there, they're just like, we have to wake up at 4 a.m., start heating up the car and the engine and everything, and
you know
then
that in Alaska there's a whole month of time where the sun doesn't come up.
Yep, exactly.
And there's a movie called 30 Day Night. You should watch it. Vampires kill everybody.
Vampires in Alaska. I mean, they're cold enough, right?
On an old ancient
Surprise.
that hears from them, and everybody gets. It's horrendous.
Surprise.
Live in Alaska.
So the SEC's action against Guggenheim Securities reassures whistleblowers. So what happened? Well, this firm, Guggenheim Securities, they were prohibiting and impeding employees from contacting the SEC or any other regulatory body about potential security law violations. So they had to get permission first. Their employees had to get permission first from them to then go to the SEC, which is like
conflict of interest.
2016 to 2020. This has been occurring. In their core compliance manual for employees, it warned that the prohibition applies to any subject matter that might be discussed with a regulator, including an individual's registration status with FINRA. Any employee that violates this policy may be subject to disciplinary action by the firm. So the SEC saw this, and it was brought to their attention in 2019. And now they finally got fined $209,000. Who knows how much money they've made during the meantime, because any firm that is sketchy enough to say, no, you have to come to me first, and then you could go to the SEC, or else you're going to get fired. They're doing something that's sketchy underneath the hood. So, $209,000 for them is chump change. We all know it's like tiny amount comparative to probably what they've done in cheating the market or cheating in their whole environment. So, but what can we do? Little wins here and there, I guess. Little wins. And the next one, JP Morgan warns hedge funds to expect intraday margin calls. So now that banks are now looking at the DTCC, which they are imposing these rules that are saying, hey, you primary brokers, you're going to get margin called at any time now. Now the banks are just like, well, if we could get margin called at any time, I want to make sure like my patrons get margin called at any time and know that.
I protect myself. I don't want to be on the hook for
Exactly.
your margin calls. So now you're going to be on the hook for your own margin calls.
Exactly.
As it should have been from the fucking beginning.
And that just comes from Archego's default. We spoke about this yesterday on how Credit Suisse is on the hook for $5.5 billion from just a hedge fund being 5 times over leveraged and having the buying power of $100 billion. They got margin called at $30 billion when they only had $20 billion to play with. They're on the hook for $10 billion, and JP Morgan is like, hey, we don't want that. So they're going to be doing daily checks on all these hedge funds positions to ensure that they are up to margin. And if they're not, they're going to get liquidated. So I'm glad they're cracking down on this. But we'll see, because I bet you right now, all the banks know that they're in a tight spot. Yeah, they had great earnings calls and everything like that, but they're still in a very tight spot. And as we can see from Wells Fargo, them cutting their lines of credit, and Morgan Stanley, all these guys are just taking hits right now. Morgan Stanley was another one that took a hit from Archegos, about $1.1 billion. So, you know, right now everyone's now getting their risk management team involved, and they want to ensure that they're not going to lose money on behalf of their client when they're supposed to be gaining money. So
Right, exactly. They're going to watch their own asses because there's no reason they should have to pay for funds doing stupid things. Just make sure they margin call you 7 times a day is going to make it really hard for you to do risky bets because they're going to be on your ass
all the time. And you know what's even more fun is that the reverse repos are up again, so not too high. Today it was just $798 billion. So, you know, whatever.
relatively.
Relatively.
If you consider relative to how much it's been,
Yeah.
terrible.
Yeah, it's not terrible. It's not at its high of
$991
billion. So, you know, we're gonna see
Kinda
how
low.
it goes. Watch out for the housing market. I think that's another thing that we're looking at right now. The housing market. So, what happens with all these banks that have so much collateral? Well, guess what they're doing? They're buying houses because they don't know what to do with their money. So they say, hey, why don't we actually try to get some sort of investment from this free floating cash? They're buying houses. So that's another thing that I'm going to be.
I know the
reporting
funds
on
are buying
much more.
houses.
Mm-hmm.
I don't think the banks are.
Yeah, I'm talking about like BlackRock. BlackRock is one of
that's
the
different.
guys
Those
that
are funds, though.
Yeah,
like, those are
they're
different. Like,
they're
BlackRock's not a
buying
bank.
houses at a ridiculous price above asking because they can, beating out every other bidder, and then they just want people to rent from them, and then they'll get in that cash. But guess what? They're creating their own cycle of demise. They're going to end up buying all the houses. There's not going to be so much supply, and the demand's going to be going down from the high prices.
Right. I mean, right now there's a very small number of houses owned by these institutions, so we're still far off from that. But that is true. They are going to buy up more because they want to consolidate those earnings into securitized products and use their cash. But the biggest problem in the housing market is a lack of demand. And that lack of demand, what that means is not people looking to buy homes, the number of human beings that need places to live versus the number of places that exist for those human beings to live in. So the problem is that all these home builders are waiting for their prices to come back down of all their goods so that when they build houses, they can make more of a profit on them, weighing on this housing bubble. And I think that, that could cause a shortage for a long time because the prices are being jacked up from a limited supply and people are waiting for lower costs of goods to actually build these homes. So then they wait, people have demands to buy houses, they need places to live. So, as a result of this, you're going to see a lot more people trying to rent until they can buy. So you're still going to see home prices as a whole continue to rise. But, home builders were about 6-something million houses short of the demand, which is in terms of number of people that need somewhere to live.
Yeah. And for the people who own houses, don't sell right now, even though they're great prices to sell. This couple in Colorado, they ended up selling their house and now they're renting. Their rent is more than their mortgage. So
right,
you sell a house.
Remember that if you sell a house in a market where everything's expensive, you'll get more money for your house, but then you have to turn and buy another house in a market that's this expensive. So if you can afford to stay where you are for a little while until the housing market comes down, you should do that. Just because it's now. Remember, you have to live somewhere else. Unless you have a place you've been able to lock in and say like that's going to be mine. Don't just sell it before you have another place to live. Otherwise, you might get caught renting for a long period of time at very elevated prices because everybody's renting now because not everybody can find a house. So, got to keep that in mind. Maybe the family around.
Yeah. Well.
And with that, I think that's Random Rabbit podcast number 20.
Yes, it is.
Thank you, guys. Thank you for everybody who showed up, our live audience, our viewers. You guys make this happen. And also you as well, Jeremy and Wyatt. You guys are part of this too. But it's you, the viewer, you who subscribe, you who come on and watch us and make fun of us and laugh at us together. You guys are the real heroes, and we're just absolutely grateful. And we're out of here. Peace out, guys.
Yeah. Peace. Buddy. See you tomorrow.
You guys have a good one, and stay on the flip side. See you tomorrow.